Hello everyone. This is the pre-market report video for today, 8th September 2025 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's discuss what happened on US last Friday. Before their market opening, US Bureau of Labor Statistics released all US jobs related macros such as non-farm payroll addition data, unemployment data and average hourly earnings increase on month-on-month basis. First, non-farm payroll addition data for August month, or simply we can say new jobs addition for the whole country US came as only 22,000. This is one of the historical alarming very low job addition number. After pandemic in the last 5 years, only on the two occasions the job addition was this low. One when Biden got elected as president, then another again when Trump got elected as president. In those times it's understandable because of policy uncertainty and with respect to other political uncertainty, companies don't want to hire the new people. But in normal non-political time, this is the lowest addition and it is lower compared to the expectations 75,000 new job addition and also lower than already lower July month job addition. Just to give a perspective, in the Biden presidency, jobs addition always stayed between 150,000 to 400,000. Hence, this jobs data is way worse than what analysts were expecting. However, though this is bad from economy point of view, there is a mild positive from the market perspective as it made almost certain now that the next FOMC meeting to perform the interest rate cut. On the more negative side, the unemployment rate increased to 4.3% from previous month 4.2% and the average hourly earnings increase on month-on-month basis was constant 0.3%. Here, this was not good as it directly increases the inflation, so the macro wise it was not favorable. In addition, US immigration team detained around 475 people who was working in the US Hyundai factory in their surprise inspection, and the US government warns the US companies that they are going to conduct such more surprise raids in various companies. So it seems in US from economy activity side it's not going to improve anytime sooner, and all this was enough to create the chaos and made the market to trade significantly negative, but in the closing time it managed to recover some. Still at the end of the day, Dow Jones decreased by 0.48%, S&P 500 was down by 0.32% and Nasdaq outperformed because of the rate cut optimism. It closed flat. Then regarding VIX, it didn't change much, still around 15.2. About oil, on Sunday in the OPEC plus countries meeting, they agreed to increase the oil output further. So during weekend, oil price dropped 2.5%, but now it mildly trading positive like 0.2%. At the time of this video, WTI crude trading at $62 per barrel and Brent crude trading around $65.5 per barrel. Then coming to Indian ADR, in line with the Indian market and US market negativity, most of the stocks closed negative. Only Wipro was flat and Reliance GDR closed positive. However, if we calculate the arbitrage, it was not that bad. Both the IT stocks showing some positive signs, but the banking stocks indicating furthermore fresh negative arbitrage difference. About GIFT Nifty, on Saturday morning it closed at 24,825. As usual, equating that to our spot market, indicating gap down opening of 20 to 30 points. However, please note, after the GIFT Nifty close, our Indian Prime Minister Modi made a friendly tweet about US President Donald Trump in response to US President interview about India and Modi, which all we discussed in detail in the week ahead video. So this might change now. However, there is a furthermore development in this area. On Sunday, speaking to news reporters outside the White House, Donald Trump was asked whether he was ready to impose further sanctions against Russia. And for that he replied, "Yes, I am." However, he didn't say any further details like when and how. This question was asked to Trump on Sunday as Russia did the massive strike on Ukraine. Like they sent more than 800 drones and 13 missiles were fired at Ukraine, which damaged Ukraine's government building for the first time. Only on Saturday night I thought the relationship between US and India were improving, but now it seems that looks like fizzled out. In addition, because of Putin's action during weekend, US Treasury Secretary Scott Bessent requested European Commission to put tariff on the countries that buying Russian oil. So far, no response from the European Commission, but by chance, if European Commission also imposed sanctions or announced any measures against India means, then I believe that will be huge disaster from the market perspective. Hence, please keep an eye out for any potential development. Then, sector-wise, again we could expect auto sector to be on focus as all the major auto companies passed on the GST rationalization benefits to the customer by reducing the respective product price. So, as a summary, last Friday, US market closed negative and in line with that, GIFT Nifty is indicating the gap down opening and Indian ADR in US was mixed. However, there is one positive news. After 2 months, Indian Prime Minister Modi and Trump again started to talk positive about each other in the social media and in the interview. But on Sunday, potentially this new escalation between Ukraine and Russia conflict expects to undermine that. So let's look out how market will be reacting for all. Anyway, about institution, in the cash market, no surprise, again FI was net sellers. They net sold for 1300 crore rupees and DI was net buyers. They net bought for 1820 crore rupees. Then moving to derivative market, in the index option market, both FII and proprietary traders slightly reduced their negative stance and client or retail traders slightly reduced their positive stance. On Thursday end, both FII and proprietary traders held net 8% and near net 5% respectively. More open interest that wants the market to go down than the open interest that wants the market to go up. That on Friday end dropped to net 7.5% and 2% respectively as they bought more call options. On the other hand, it was retail traders, they reduced their bullishness by selling more call options, but their overall options still net over 10% open interest wants the market to go up. Then in case of future market, no stance change. FII holding mega short position 93% and whereas retail traders holding 71% long position. If required, please pause and have a look. So in simple, retail traders inclined towards bullish whereas FII and proprietary traders inclined towards bearish side. Just a disclaimer, I am not recommending any. I am just conveying what day end each participant wise open interest data conveying. Please don't make investment decision based on this. Then as per stock open interest, VBL, Persistent System, Siemens, Godrej Properties, BPCL, Cipla and Torrent Power are some of the 67 stocks that got an increase in open interest along with a negative close indicates the short build up. On the other hand, Nuvama, Zydus Life Science, Motherson, Sona Computer, Glenmark and TVS Motor are some of the 61 stocks that got an increase in open interest with a positive price close, which means these stocks got the long build up. Regarding the things to look out, early morning today before our market hours, Japan's GDP growth rate is due to release. Then during our market time in the afternoon, Germany's industrial production growth rate and in the aftermarket hours, Chinese trade data are the things we need to keep an eye out today. Coming to technical, last Friday Nifty opened 80 points gap up above 24,800 but failed to sustain and dropped to 24,600. But again in the afternoon it gained some and managed to close positive above 24,700. Thus on the daily chart, Nifty formed a bearish candlestick pattern with a long lower shadow indicating underlying bearishness but also buying interest at lower level. Nifty closed slightly above the 20-day exponential moving average as well as the midline of the Bollinger Band and managed to defend the 100-day exponential moving average. However, it failed to hold above the 50-day exponential moving average, which remains crucial for any further upward movement. In terms of momentum indicator, both RSI and MACD showed a positive crossover, indicating a slightly positive bias in the momentum, but to confirm, it required to start trading above all the key moving averages. Hence, in the upcoming session, Nifty is expected to remain range bound between 24,500 to 25,000 and a breakdown below this range could lead to a test of the key support zone at 24,400 to 24,300. On the other hand, a decisive breakout above 25,000 could open the door for a rally towards 25,200 to 25,250 level. In case of Bank Nifty, it opened more than 200 points gap up and witnessed the similar price action as Nifty, then finally managed to close above 54,100. Thus on the daily chart, Bank Nifty also formed a bearish candle with a long lower shadow indicating buying interest at lower level. But it's still trading well below the Bollinger Band middle line as well as the 20, 50 and 100 moving average, and both MACD and RSI continue to show negative crossover. So the mild positivity seen in Nifty is not visible in Bank Nifty. Hence, for now 54,500 to 54,600 zone expect to act as the immediate resistance with crucial support at 53,600 to 53,500 zone. Regarding the options front, the maximum call option openers was at 25,000 strike followed by 25,500 and 24,900 with maximum new call option rating at 25,100 strike and then 25,500 and 24,800. On the put side, the maximum openers was at 24,000 strike followed by 24,500 and 24,600 with maximum new put option rating at 24,000 strike and then 24,650 and 24,800. Thus, from options data, it suggests that 24,500 is expected to act as the key support zone with 25,000 being the crucial resistance level for this week. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this as not a SEBI registered advisor. I am doing this for me and viewers educational purpose only. Thanks for watching.